Hello guys, I will be performing a trade recap on GBPUSD. It was a buy trade taken on the 15-minute to the 5-minute time frame. But first of all, we begin our analysis on the weekly time frame. So getting into the charts, guys, as you guys can see, price was creating lower lows, lower highs, lower lows, lower highs, lower lows, going to the downside. Structure got broken at this point, telling us there's a possibility of price going up and price broke structure here to the upside. Retraced back, went, started moving up again, moving up, moving up, moving up, moving up, moving up. So, and also, if we look at these charts, guys, me personally, I'm able to notice that price is most of the reaction on GBP occurs at demand and supply zones. This was a demand zone mitigated. It was a demand zone. This is a demand zones. And presently, sitting in this area, we can see here is a weekly demand zone. So just for the fact that price is retracing within this weekly demand zone, my expectation here is for price to provide a reaction that will buy upward to continue to follow the upward movement, guys. So because of this concept, I had to scale down into the 30-minute time frame to be able to look for opportunities. And scaling into the 30-minute time frame, I'm able to identify one or two structures which permitted me to scale into the 50-minute time frame. Okay, this is the action of all what we're seeing was the action of price within that weekly demand zone. We saw clearly, based on my concept here, that I remember, guys, I always talk about this concept of price inefficiency. When we see a candlestick form like this, for example, where the length of a candle wick, this is the candle wick, for example, this is the candle wick, the length of this candle wick is far more greater in length than the length of the candle body. We call this price inefficiency. Because of this price inefficiency, there's a probability that in the future, price might come to this area to fill up this inefficient price action, to fill up this candle wick up to at least 50%. It might fill it completely, but it must be at least 50% for us to consider that for us to consider that this price inefficiency has been corrected. And as we can see clearly here, the price inefficiency was corrected. And looking more at the chart, we're able to identify some structure. Price came down, went up, and formed this low. It can be seen clearly on the 5-minute time frame, but I want to stick to the 50-minute time frame. So let's have a bigger picture of the market. So price came here, reacted, went up, broke structure to the downside, reacted, went up, came down again, and swept this week before now going up. Upon going up, this was a previous high which was violated. As price was going up, there's a probability that price should come down to continue the movement downward. But what happened? Price broke this market structure which was here and started pulling up, telling us there's a change of market structure here. As we can see, annotated up means there's a probability that the price will go up. So what happened? During the Asian session, market was consolidating and creating small market structures. And at the beginning of London session, the Asian low was taken out, and later the Asian high was taken out, creating another break of structure to the upside. What was it telling us? There's a potential, since market has broken to the upside, there's a possibility that price now might retrace and we get an entry to continue our buying. So price retraced into this 15-minute demand zone, giving the opportunity to enter the trade. But because I was looking for a confirmation of trading, I had to go down to the 5-minute time frame to be able to spot my entry. Price came into this 15-minute demand zone, got mitigated and provided a reaction which broke structure because it was a smaller structure form. Price created a low, which created a lower high, which created a lower low. This lower low was the reaction point which was able to push price right upwards to break structure. You understand, guys? There was a break of structure here now, telling us there's a potential for price to buy. So we're expecting price to come down into our 10 minutes demand zone. You guys see 10 minutes here was our 10 minutes demand zone. If I go down to a 10-minute time for you guys, we see clearly this was our 10-minute demand zone where we took where we were able to identify the demand zone. It was a 10-minute demand zone. So we were expecting price to come here and we should enter our trade from here. Why was I targeting this high? I was targeting high simple because there was inefficiency in price action. Why inefficiency in price action? If you look at this candlestick, you look at this candle body and this candle wick, the length of this candle body, sorry, the length of this candle wick is almost 3 times the length of this candle body. That's what I call inefficiency in price action. And since I have a possibility of buying here and expecting the market to continue the buying movement above, I was expecting that price should be able to go up and fill this inefficient price action to be able to balance the efficiency here. And that's the reason why we took the trade on GBPUSD and the trade played out marvelously. The trade played out marvelously and was able to hit our target. Thanks guys for watching. That was all about the video. And also I would like to I forgot in the beginning, I would like to show you guys at the end a diagrammatic representation of this very setup. So this is the buy setup. This is the buy setup. It is exactly everything I explained within the chart is the same here. We waited for a change of structure to the upside. We waited for price to come in and tap into our demand zone that was formed on a 10-minute time frame, and we put our take profit where we're expecting price to reach. Back in the charts, we're expecting price to reach that area of inefficient price action, and that was exactly how it played out. Guys, I must always tell you something. You don't need 10 systems, you don't need 5 systems or 3 systems. Consistency requires doing the same thing over and over again until it becomes a habit. So, me personally, each time I look to enter a trade, I focus on market structure, liquidity, demand, and supply zones. Then once I'm able to identify these 3 concepts, I enter a trade based on my setup. Thanks for watching, guys. Stay tuned to my channel for the next videos. Like, comment, and share. Stay safe and stay blessed. Ciao.